Welcome aboard the Bitcoin Express. My name is Chase. Let's get to it. The IRS is coming for your cryptocurrency. But if you stick around for this video, you'll understand how it all works and how you can use this information for your benefit. The IRS is putting cryptocurrency front and center on the 2020 tax return. The question is now on the draft 1040 individual tax return form near the top. And this is front and center, so everyone will have to fill it out. This is different than the question that was on the 2019 tax form. On 2019, the same question appeared on a separate 1040 Schedule 1 form, but the problem is not everyone needs to file a Schedule 1. So this is what it looked like last year, and this is how the question is going to look like again this year. It asks, at any time during 2019 or in 2020, did you receive, sell, send, exchange, or otherwise acquire any financial interest in any virtual currency? And it's a simple yes or no answer. So if you are someone that just buys cryptocurrency and you never sold it, you didn't send it, you didn't exchange it, you just bought it on an exchange and left it there, you can hit yes for this question, but you don't have to detail or list all of your transactions. But if you are someone that was trading, sold it for fiat, send it from exchange to exchange, you likely will have to detail what you did with your cryptocurrency. So because of this, now everyone will have to answer to this question, yes or no. And it means approximately 150 million filers will see the question when they prepare their 2020 returns. And I know what you might be thinking. It's okay. I'll just say no. I'll get around this. But that's very dangerous and very risky because all of your information is already out there. It's on the exchanges because all the exchanges now require KYC. So even if someone were to write no on this question, whether they bought or sold cryptocurrency, maybe the IRS does not know or will not know at the moment, but eventually they will find out in the future. And that's exactly what we saw last summer in 2019. In July of 2019, the IRS sent out 10,000 letters to crypto account owners who didn't pay their crypto taxes. And they got this information from Coinbase. Coinbase was forced to give this information to the IRS. And moving towards the future, likely we'll see exchanges, they'll have to comply with governments, hand over that information. So it's probably better just to be upfront and honest whether you participated in cryptocurrency. And it's pretty difficult to calculate when you bought cryptocurrency, when you sold it, everything you did with your cryptocurrency. Luckily, there are platforms that make it easy. One that I personally like and have used is cryptotrader.tax. This is a software where you take your information from your exchanges, whether it's Gemini, Kraken, Coinbase, you upload it and it does all the work for you. So it's super simple, super easy. And just like you have to report your gains in crypto, you can also report your losses in crypto. Even if you're just trading cryptocurrency to cryptocurrency and you never sold out for fiat and you have losses on paper, you can use those losses to your advantage and you can use them as a tax write-off. And you can continue to apply it to your taxes until it runs out. So you can carry it over year to year until it runs out. So now that you understand that crypto taxes, it's here, it's a real thing, you will be asked, it will be hard to lie about it, you have to understand how you can benefit from this in the long run. So the first thing I want to cover, this is the most important thing. This can save your future. So when it comes to trading cryptocurrency, every time you trade a cryptocurrency for another one, it's a taxable event. So let's say someone is trading cryptocurrency from the year to the end of the year, so from January 1st to December 31st, and they're up in the profit. Let's say they're up $10,000 in profit. So they need to pay tax on $10,000. Now, what happened to many people, including this post I have in front of me from a Reddit user, how he was asking, did crypto trading ruin his life? The reason he asked this question is because he traded cryptocurrency and he made a profit. So instead of taking the profit and paying tax on it, he took the profit, bought more cryptocurrency, and held it into the next year. So December 31st passed, he held it into the next year, and that money, that $10,000 profit, he used a much larger number. I'm using a simple number here. That $10,000 profit now loses all its value. The person still owes taxes from the previous year, except now they don't have that money. So just make sure that if you're in the profit and you owe taxes for the tax year, that you're not taking that money, putting it into another investment, and then holding that investment into the next year. Because if you hold it into the next year, you're putting yourself at risk of losing that money, and now you don't have money for the previous year. I hope I explained that well. I hope that made sense. So now that we got that out of the way, what are some ways you can benefit from crypto taxes in the long run, knowing that you likely will have to pay them if you're living in America or a country that demands taxes? So the first thing is you don't want to buy and sell cryptocurrency within 1 year. If you buy and sell cryptocurrency, or you buy cryptocurrency and trade it for another cryptocurrency within a year, it counts as a short-term capital gain. So with short-term capital gains, it's taxed the same percentage that you're taxed on your income. So if you're someone that's making a lot of money and you're being taxed 30% on the year or 35% on the year, you're going to have to pay the same tax on your cryptocurrency, 30% or 35%. But if you buy your cryptocurrency and hold it for more than 1 year, this is a long-term capital gain. And with a long-term capital gain, the rates are 0%, 15%, or 20% based on where you live and also how much money you are making. So let's say someone is participating in long-term capital gains. They buy and sold they bought their cryptocurrency and they sold it after a year. So if they're single and making up to $40,000, they're going to pay 0% on their long-term capital gains, and in this case, on their cryptocurrency. If someone single is even making $40,000 to $441,000, they'll only pay a 15% rate. Someone that makes, let's say, $300,000, they're normally taxed somewhere between 30 to 40% on their income tax. So someone making $300,000 that is buying and selling cryptocurrency within a year, they're going to pay a 30% tax, 35% tax. But the same person who holds that cryptocurrency for more than 1 year is only going to pay 15%. So for the long run, you save a lot of money, or I would say you make a lot more money when you participate in long-term capital gains. Remember, when it comes to investments, it's not how much you make, it's how much you get to keep at the end. And that brings me to the second point I wanted to speak to you guys about. The second part is that if you're in Bitcoin for the long run, knowing that you likely will have to pay your taxes, you can invest in a Bitcoin 401k, a retirement account. Just like you might have at work a retirement account where you put in $200 or $300 every month, you can do the same thing with Bitcoin. So with a Bitcoin 401k, you take tax-free money, you put it into Bitcoin, and then as Bitcoin grows, eventually you'll take the money out and then you'll pay the taxes. But if you're in it for the long run, I personally believe in a Roth 401k, especially for Bitcoin. With a Roth 401k or a Roth IRA, you are paying the tax already on the money and then you're putting it in. So you have your money, you pay the tax already to the government, and now you place it in a Bitcoin Roth IRA and you let it grow. So if Bitcoin reaches these insane prices that many people think it will, 200,000, 300,000, 400,000, whatever it is, when you take that money out of a Bitcoin Roth IRA, it's all yours. You don't have to pay any tax, not even 1%. So this definitely would be for someone who truly believes in Bitcoin for the long run and doesn't have a problem holding it until they're 59 and a half years old. So while this sounds amazing, of course, there is a downside. So the downside of a Bitcoin Roth IRA is that if you take the money out before you're 59 and a half years old, you may have to pay taxes and you will be charged a 10% penalty fee. Now that you know all this information, I hope that you use it to your advantage. If you appreciate this video, leave a like, show your love, Thank you for listening, and I'll see you next time.